Well, given that the fourth quarter was so challenging for everybody, markets were turbulent, every asset class took a hammering, equities, rates, etc. So given that, quite pleased with where we wound up. As you just mentioned, our bottom line grew 28% for the year. Our top line grew 11% for the year, and so reflects some fairly strong and robust growth.
Okay, and I have to ask you, for the rest of this year, 2019, at any level you want to chop and change and look at for corporates, macro, etc., things are likely to, at the very least, slow down. How is it going to affect or likely to affect DBS?
I think the overall macroeconomy will be a tad bit slower, but I do think that there are some mitigating factors. I think monetary policy is getting looser. I think there is some fiscal stimulus coming down the pike. And a slow Asia still grows 5.5–6%, so there's nothing to scoff at. I think relative to the back end of last year, actually business momentum might be improved. We're already seeing that. The start of 2019 has been stronger than the last couple of quarters. So on the whole, however, while there will be general slowdown, I do think we'll be able to get reasonable growth rates this year as well.
Okay, let's talk about your first point of that is rates and monetary policy, what central banks are doing. The big issue, of course, is the Fed is in pause right now. The question is for how long. That's got some analysts worried about names like DBS simply because U.S. rates, SIBOR, the benchmark, the local benchmark, is very sensitive to U.S. rates. And DBS, because of your deposit base, is actually even more sensitive than that. With rates looking like they've stalled, how is that going to affect DBS performance?
Well, first of all, we will continue to expect to see improvement in NIM through the course of this year, and that's because our asset book reprices slowly. And so all of the rate increases that happened in the last couple of years have not yet been priced through our book. Just the follow-on effect of the rate increases of the last year or so should be helpful to us. And so if you assume there are no rate hikes this year, we should see an improvement in our NIM by 4–5 basis points.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.